If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course. What's up traders, this is Vee Trades and today I'll be doing a technical analysis breakdown for MercadoLibre with the ticker symbol MELI. If you want a chart analysis guaranteed to be done, please read the description below. Also take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So if you guys are interested in my course, I have a sale running for only 1 week, so please check that out and look for that discount code in the community post section. So let's take a look at the daily chart for MELI. This is definitely a stock I'm personally interested in purchasing, but at lower price levels. You can see that it was a nice move up, and it looks like we came back down to fill in this gap and test this breakout level. So let's go over the daily chart right now. Looks like there was strong support at the 613 level when prices reached it. Prices could not go any lower. We reversed and we were pretty much inside this range, which we broke outside of. And you can see that if I just drag it across, prices came right back to the top of that range to test the breakout level. So it's testing it for support right now at that 832 level. So if it holds, we can see a bounce up and maybe even a retest of the 1086 level. If it breaks, we're probably going to come back inside the range and fall all the way down to the lows once again. If I drag it up, you're going to see another thing that I talk about is when price action breaks outside of range and is successful, we usually double the range. And you can see that pretty much that's exactly where we went, to the 1082 level, double top and reverse back down. So let me go and drop this back down to the middle. So are we going to go up or down? Well, we could do both actually, but I'm leaning more towards the downside, and I'll go over the bullish reasons first and then we'll go over the bearish reasons. So we had this nice pop up and then we started seeing we had a double top. Prices fell down inside of this slim little channel right here, and then we had a break of this pattern and a few legs down to a new low, tested the breakout level, and this tells me that we could see another large impulse up. So I'm going to show you that right now. If we do get another large impulse up, the target is right around the $1,300 level. So that target is a possibility, but the reason I'm not leaning towards the bullish side is because the bias is still down. Let me show you guys that right now. So let me zoom out a little bit more. Let's go and connect the swings. So it looks like this was the downtrend channel MELI was respecting until we did see a breakout side of this pattern. Let's go ahead and make this yellow. So we did have a breakout side of this pattern already because we cannot come back down to the lows of this channel. So we had a breakout side of it, a move to a new low. That's where prices started going sideways and forming some type of bottom at the 614 level. And then we saw a nice move up, which is usually a reversal sign. But since we came back below the EMA, and this is only a single test of this breakout level, that's why I personally would not go long right here. I would have to wait to see prices get above the EMA and pull back and find some type of support and then continue with the next leg up. So that's why it's aggressive going long right now. What could happen is a trap, and that's what we're kind of seeing right now. You can see that if people entered long right above this green candle, the next day later they're already negative because it's red. So this could be a trap and could see a harsh move down because it's gonna be a lot of long traders trapped and could see a flush out. So that's why I personally wouldn't go long until that criteria is met, that we get above the EMA and we bounce from it. Then that would probably be a good opportunity to get in with the next leg up. So since I'm leading towards the bearish side, these are the reasons why. So the first reason is that, again, we had a breakout side of a range and we just tested it one time. So most breakouts will fail. So if it fails, we're going to get a breakout on the opposite side of the range, which is back down to the $600 levels and the $500 levels. So that's the first reason. Second reason is that the bias is still down. Even though the trend does look like it's over, obviously we can still make another leg down because sometimes we do make two legs down in a trend. So if this is the first leg down, this would be the second leg down, and it's right at the 422 level. So that's probably the next That's probably a good target if prices do continue to drop. And overall, the market is bearish, so I don't think this stock is going to be divergent from a bunch of other stocks, even though it is a great one, is beating earnings quite a few times, and they're growing at an extremely fast pace. But nonetheless, technicals matter more because that's what traders are looking at. So I'm expecting basically prices to break down back inside of this green range, come back down to that 617 level, break that level, and hit this measure move at the 424 level. So that's what I'm expecting to occur. Now, if we just get back above the EMA and bounce, most likely we're going to make that second leg up to that $1,300 level. But I think it's just slightly more likely to go lower than higher at this point. So that's everything I see from MELI. And let's go and wrap it up on the weekly chart. And here we have the weekly chart for MELI. You can see there was a nice pop up back in 2020 all the way to 2021. A lot of currency and stimulus helped the stock rise, and now we came back pretty much right to that breakout point in 2020. So there was a nice little double top. Price had a hard time breaking through that $2,000 psychological level. Sold off. We were getting rejected from the EMA now versus bouncing from it in the past. So we got rejected there, and we did close below the EMA again this week, actually last week and this week too. So that's not a good sign. So we fell below it. So this looks like we could go lower. I'm looking for that 622 level first, which is a new low of this downtrend, and then a measured move target at the 430 level, I believe. Let's go and show that right now. That's that. Yeah, it's actually pretty much at the 426 or 430 level. So that's my two targets, and that 430 level will bring it right below the 2020 lows, which a bunch of other stocks have done also already. So basically still bearish. I mean, we could bounce up higher, but if the market was more neutral and not this bearish, I would have been leaning more towards the bullish side. But since we got below the EMA and we had that breakout and we can get that second leg down, I'm leaning more towards the bearish side, and I'll be waiting for lower price targets before I invest into this company. So overall, MELI's pretty good, but technically it's bearish, and might see a bottom later this year or even mid of next year. So that's all I have from MELI, and I'll give you guys an update if anything drastically changes. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.